Hello. Welcome to Tuesdays with Lloyd. This is Enya here, your host. For over 350 years, Lloyd has been the global leader in insurance innovation. In the front and center of innovation at Lloyd is the Lloyd Lab. Today, we're very happy to showcase Lloyd Lab led by Rosie Denée. Rosie, please take from here.
Thank you very much, Enya, and welcome everyone. It's a great pleasure to be here. So I will talk you through the structure quickly for today. So I'm going to, before we jump into a fireside chat, well, a virtual fireside chat with two of our fantastic alumni, I will be going through a quick overview of the Lloyd's Lab just to provide a bit of context about, these stories and where they've kind of generated from. So for this fireside chat, I am going to be joined by Reijo, who is the founder and chief strategy officer at Value.Space, and Robert Reville, or Bob, who is the CEO and co-founder at Praedicat. So without further ado, I'm just going to jump into some slides, but throughout this session, please do post any questions you may have in the question box, and we will do our best to answer them at the end. So the Lloyd's Lab. As Enya mentioned in her intro, we have a really proud history of firsts here at Lloyd's. We've issued a number of first policies of their kind, and sorry, the poll's just come up. And what we are doing here at the lab is trying to continue that history, but we come from a really rich history of firsts. So just running down this list, we had the first motor policy. I think this is most notable because marine insurance was really the bread and butter of the Lloyd's market. And they took what they knew, which was marine insurance, and they wanted to apply it to cars, motors. And so they used the insurance policy for a marine policy, a ship, and they called cars ships of the land. So that was innovation back then. We have come quite far since then. So off the back of this proud histories of firsts, Lloyd's really wanted to continue embracing innovation, and they were wondering how best to do it. And back in 2018, the Lloyd's Lab was the answer to that. So the Lloyd's Lab has been going since 2018. We are now running our 9th cohort, and we're about to celebrate a 5-year birthday next year, which is fantastic. And I think back then, back in 2018, the market were unsure about how this was going to work in practice and whether this was going to be a success. But I think it's a real credit to the market that we work in. We collaborate here at Lloyd's. It's what we do. It's something that is really in our DNA. And so the market really rallied behind the lab, and through the lab, we've managed to support over 100 insurtechs, and many of those are now operating within the market space. So as I said, sort of the collaboration piece is really in our DNA. And so what the lab does, it allows modern day challenges to come to a safe space where we can collectively experiment and try and answer the big problems of the day, but support each other whilst we do it. So on any given cohort, we'll have over 100 mentors supporting, and that is representing a huge number of markets within the insurance market space, as well as clients. So we all come together to try and address these challenges, and the Lloyd's Lab is that space where we can all convene. So at its heart, what is the Lloyd's Lab? It's in its essence, it is a 10-week program where we bring insurtechs into a physical space in Lloyd's where they can engage with the market and try and create products which will then end up in the market. So Lloyd's is notoriously hard to crack from the outside. So for these insurtechs, what we are doing is we are opening the doors for them to come in and really meet and engage with the market. So we go through quite a sort of solid, robust structure where we work with the market to understand what themes, what key areas they're looking at, which emerging risks they want to answer questions for. And that is a really big piece of the pie, because the market really needs to believe everything that we are doing here in the lab. So they need to be behind all of our sort of big thematic decisions. We go through a really, really intensive scouting process where we have over, 200 plus applications for every cohort. And then there is a chance for the top sort of 20 applications to have a live pitch in front of the Lloyd's audience. So it happens here in the lab, where the market will then vote on their favorite insurtechs to actually come through to the program. So we don't actually know who's going to be in the program until this point of pitch day. And then we kick off in earnest on this 10-week program. And it's really intensive, and it's meant to be intensive. It's, in essence, a product development sprint where each team has come in with an idea of what they want to achieve in those 10 weeks, be it building out a new insurance product, trying to understand how Lloyd's data can work and function in their offering or their platform, trying to see if their offering can help the underwriters underwrite risk better. It comes in all sorts of shapes and sizes, but it's a really active 10 weeks where there's this constant feedback loop from the mentors to the individual insurtech teams over that 10 weeks. So then when it comes to demo day, we have a real journey which can be told from start to finish. So sometimes on demo days, we will see insurtechs having built out whole new platforms, and they will be then demonstrating these new platforms, or perhaps building out new insurance products. So it is a really intense 10 weeks, but it's a fantastic 10 weeks. There is so much energy, so much passion, and the market really do, in those 10 weeks, give it their all. And it really shows that they're still engaging very actively with the innovation process. So this is just a snapshot of all of our alumni to date. We really scout far and wide, and it's very important for us that we have applications, and then which translates into actual cohorts who come from across the world. And so I think, before I finish, my shout out to you is, if you know anyone who's working on anything interesting and you think they could be a right fit for the Lloyd's lab, please do let me know, and I will always make time for people who are working on something new and really want to come and experiment with the Lloyd's market. So let me stop sharing my screen and we will jump into the fireside chat. So, as I mentioned earlier, I am very fortunate to be joined by Reijo and Bob. Hi, Reijo. Hi, Bob.
Hi, Rosie.
So I think before we really kind of jump into the nuts and bolts of what you did whilst you were in here and where you guys are at now, it would be great if you could tell us a bit about yourselves and intro your separate companies. And in that, give us an idea of when it was you participated in the lab. So Reijo, I will, as you're large on my screen, I'll throw it over to you now.
All right, lovely. Thank you, Rosie. So we were in cohort 4, and that was the COVID cohort. So everything was fully remote, which was entirely fun in its own self. But it was a great experience. And in terms of what we do is we provide satellite-based risk assessments for infrastructure, real estate, property, and that is to improve the combined operating ratio through lowering losses and expenses for insurers.
Great, thanks. And Bob, same question.
Yeah, Rosie. So first of all, Praedicat is a casualty catastrophe modeling company, and essentially what we do is we model a different kind of catastrophe, which is sort of a next asbestos type of catastrophe. So the risk of large-scale litigation that can result in multi-company, multi-industry, multi-year losses. And we rely on machine learning and natural language processing to mine the peer-reviewed scientific literature to find risks, Then we track them as they become scientific evidence, and then we track litigation when they actually emerge as actual litigation. Our clients use this information for underwriting and for exposure management. And we were in 2 of the cohorts of the Lloyd's lab. We were in cohort 3, which was pre-pandemic. So we got to be there in person and experience all of that face-to-face collaboration. And then we returned in cohort 5, which was another of the COVID cohorts. And so we had the remote experience as well. And both were absolutely terrific. And over the course of both of those 2 experiences, we developed a whole new approach to D&O modeling, which we have gone to market with and are continuing to build out. And it involves collaborations with other members of previous Lloyd's Lab cohorts. So, I mean, it's a larger ecosystem really that you're creating, and it's a pleasure to be a part of.
Thanks, Bob. Yeah, I think you're really picking up on something. We have got this huge alumni network, which is an ecosystem, and everyone is looking to solve a tiny little piece of the insurance puzzle in that. So it is a really fantastic ecosystem to be plugged into. We've done some poll questions, and one of the questions was, have you heard about the Lloyd's Lab? Mark, I was wondering if you could share with us the results to that poll. Is that sorry, so 55 people, so 81% of the audience have, and 19% haven't. So within that sort of, I guess, with that in mind, there's 20% of the audience who haven't heard or engaged with the Lloyd's Lab. Bob, I'm going to address this to you first. Can you talk us through the pain points that you were trying to address for insurers? And so in the lab, did you then spend time confirming that this was an actual pain point? Yeah, so in general, the pain point that we address for insurers is this risk of aggregation from large-scale litigation. So in particular, the multiple companies or industries or policy years will all get swept up in a litigation and become like a next asbestos that can result in insolvencies and impaired profitability. Our models are built for US exposures, which makes sense. That's 50% of global exposures. And also in terms of tail risks, it's probably more than 75% of tail risks. But we definitely spent some time trying to understand how much the syndicates in the Lloyd's market were actually exposed to these US general liability risks. And we got pretty clear feedback that there was a fair amount of exposure, growing amount of exposure, in fact. But we also got a lot of feedback that there was interest in something that was more general and more multi-line than something that was focused only on general liability. And it was that feedback that caused us to start to direct our modeling effort toward D&O, which was the area that a lot of people in the market said was their largest concern for the time, and has continued to be. We've gotten a lot of feedback as we've continued to develop our solutions around the importance of D&O in addition to GL and in a multi-line solution. Fantastic. So Reijo, was it a similar experience for you around pain points and what you were working through in the lab?
Yeah, absolutely. And one thing to mention, so this satellite right here is actually what we use. There are 2 of them. They're flying above us at 700 kilometers up, and they're the size of an SUV, small one. So in terms of the when we went through cohort 4, so we had, as mentors, we had an underwriter, a risk engineer, and an accountant with us. Now that sounds like the start of an anecdote, but that's the way it was. But and basically, when the underwriter saw it, she said immediately, you know, this type of information is something that we have not ever seen before, and it was really, really useful for them. And it was useful because there are 2 things that are happening in the world at the moment. So on one hand, we've got aging infrastructure all around the world. So infrastructure surpassing something called alert age. Like, for example, in the US, there are over 90,000 dams. 85% of them are something called, you know, above alert age, which means that there are around about 77,000 dams that are in that category. That's really big. And on the other side, we've got climate change as well. So in terms of the physics of this infrastructure that has been built and has been designed for tolerances, back in the day, the two colliding problems really equal a really, really big one now, which means that because of these two things, losses are happening more frequently, and they'll continue to happen, and unfortunately, that's the case. And because we're able to de-risk them 25 times more cost efficiently and 10 times faster than alternatives, it's really big. And that was the pain point that we started with, and that's where we are today.
Great. So just picking up on that. So obviously you've really clearly outlined the pain point. So when you were actually in the lab, what was the solution you developed, and did the experience of the lab kind of feed into that development piece?
Absolutely. Yeah. So I think that the lab was integral because to what we do, because we put our product together and we shaped it around the insurance industry. And all of our mentors, and indeed the Lloyd's team, helped us do that. So we specifically made it to solve problems that a risk engineer or an underwriter has specifically, and through their eyes and through their language and the contracts and the process of business as well. So it was key for us, and absolutely we shaped that together. Yeah.
And Bob, was it a similar experience for you? The sort of development phase, was the lab experience a really big part of developing the new solution?
Yeah, well, Rosie, it's interesting because when you described how the lab works and the intensive 10-week period, all that's absolutely true. And we did all that twice. But there also is another aspect of it, that the collaboration that started in the lab and the relationships that we developed in the lab have continued to endure and are continuing to shape our solution today. And just to kind of give you a sense of this, when we were in cohort 3, we met another one of the participants, which was Experian's Data Labs. And Experian at that time was working on a probabilistic risk loss model for D&O. And we were doing some work on D&O in cohort 3 also, but it was embedded in a larger set of GL D&O risk issues. And then in cohort 5, we dug in more on event-based securities litigation, which is where there's something that happens in the business that results in a securities claim and tends to lead to GL D&O clash. And so we started going further and further into D&O. And then actually the very first meeting that I had after I had been locked down in COVID was with somebody from Experian who I'd met in London. And the two of us decided to combine efforts and go to market with a single solution that used both of our efforts that we had developed in the lab. So they have their initial sort of what we call the baseline risk model, and we have our emerging risk model on one platform, which we're going to market now. So the period of work in the lab was intense, but it's ongoing in that it's continuing to shape what we do today and resulting in product launches now that we began back then.
I mean, that is just so cool. And, I love stories like this because it really demonstrates the power of the lab. So you've slightly touched on it there, but can you tell us a bit about the uptake of what was developed in the lab, within the wider marketplace?
Yeah, well, first of all, Experian, I know, has had uptake of their model. They have a number of syndicates who are using it for underwriting. What Praedicat developed, our D&O thing that we developed, was part of a scenario platform that has been picked up by several syndicates also and is used for essentially regulatory exposure reporting for Lloyd's and for the PRA. And then now our combined solution, we are just coming to market with today. So there's very high interest in the ability to have that perspective on risk that both looks at the baseline, but then also helps you to interpret the emerging things like greenwashing and event-based securities litigation in the context of the baseline risk as well. So high interest, but frankly, on the combined solution, early days.
Thanks for that. So Reijo, with you, I mean, what you've created is highly visual in some sort of senses, and I guess can really tell an easy story to a lot of people within the insurance industry. So has that worked in your favor with the uptake piece?
Yeah, absolutely. So I think we spent quite a bit of time to shape it in a way that underwriters and risk engineers want to see it. So I think, yeah, it is highly visual, and now we've got to a point where it is really, it's like logging into Facebook and you can see satellite data essentially, and looking at structural risk of multiple assets. But I mean, we started with dams actually, then we moved to mines and tailing storage facilities, then to commercial and large property, and now that community part that Bob mentioned is very much alive, in that we now see that continuing the conversation in the community. We've now come to a place where our clients now want, we're developing a new product around this, is ESG requirements as well. So having a look at what risk is around areas that you're insuring in terms of large cities and property risk there, and casualty, and what happens with people if they're going to be displaced, etc. So the ESG part is a new one that's emerging, and looking at large parts of cities as well, and understanding where to insure and where not to insure. And yeah, that whole thing has evolved. Yeah.
Incredible. So Mark, I'm going to ask you to throw up the polling questions again. Sorry, I've managed to get rid of them. Thank you. So we asked you, audience, a question around if your company engages with insurtechs to help developing an understanding around risk and emerging risks. And let me just scroll down to see. So it's a pretty even split. 53% say yes, 47% say no. So it will be really interesting to hear from Reijo first. What sort of commercial impacts are insurers finding after they implement your solution?
Yeah, so in terms of the total impact, it's absolutely huge. So improving the combined operating ratio through lowering losses and expenses is no small feat. But by now, we work with large tier 1 insurers all around the world. And in terms of what underwriters and risk engineers jointly can do, is they can pick better risk and very quickly. So we're able to produce a risk assessment within 1 to 2 days that would otherwise take weeks. In terms of other methods, you can pick the best risk from that portfolio to make sure it's as optimal as possible, and that leads to client partnerships as well. If you actually tell your clients that, hey guys, you should really look into this and do something about it. So those are just a few things, but yeah, and now the ESG part, of course. So that is new, as I mentioned, but very powerful as well. So what we're seeing is that insurers have perhaps looked at the risk in terms of on an asset level, which is perhaps looking at something through a straw, but now they can open both eyes in terms of having a look at a 30-kilometer radius in terms of what's going on near it, around it, and what's potentially affecting the site itself, and then taking care of environmental, social, and governance requirements as well. So yeah.
Yeah, you're giving them so much power with all the information that they can access. It is incredible. So Bob, what commercial impacts are insurers feeding back to you after adopting your products?
Yeah, well, we recently completed a study with an outside advisor of what the commercial impact that we had was, something that we share with our clients so that they help guide them in how they implement the product, because it all depends upon the implementation and the application. And what they found, first of all, was that because what we're dealing with involves large-scale aggregation risk, one area of impact was rating stability and improvement, which they said can lead to a 2 to 6% reduction in the cost of capital. Then they also said, because of the way in which the information that we have can be used in the reinsurance decision, that it can lead to increased ceding commissions of 15 to 25%. And then we also, in the basic application in underwriting, we help to identify market opportunities and to reprice underpriced accounts. And this can lead to increasing premium 2 to 5%. And then also because of the way in which it provides transparency on underwriting and on capacity strategy, that it reduces account churn by 20%. So there's also one other key area, which is kind of loss avoidance. Often we've tended to think about it in terms of if we can help you avoid one large scale, let's say 10 million or $25 million loss on a large account, then you'll more than pay for what you're buying from us. But since that's sort of a counterfactual, we don't rely on it. And it's hard to quantify, but really in many ways, that's probably, often the number one way in which we'll deliver value.
Well, I mean, some incredible and really sort of attention grabbing numbers there. So it is amazing that you can quantify it so easily. I think sometimes some of the problems we have with some of the solutions coming out of the lab is that quantifying piece and being able to put numbers to show the true value. So that is fantastic that you can do that. So obviously, being immersed in the lab, I see daily I guess the sort of barriers that insurtechs come up against when they're trying to engage with insurers and trying to create commercial deals and encourage adoption. I mean, have you experienced that, Bob? And if you have, did the lab help you break down any of these barriers in any way?
Have we ever experienced barriers?
I mean, it's not a trick question.
This is my life. Well, I mean, insurers have notoriously long sales cycles. This is not something that's unique to Lloyd's by any means. You have to identify a champion. That champion has to get other executives to agree. There are committee decisions. Sometimes you have to wait till next year's budget. You can get one blocker, one executive who, for whatever reason, saw your product 3 years before and decided it wasn't, what they want, and they won't let it get passed through the system. Yeah, it's a challenge. And I'm sure if there's any insurtechs out there, all of them are nodding their heads right now. But the Lloyd's Lab helped a lot. I think the mentor process, first of all, you mentioned how they vote. And so when somebody votes and says they want to be a mentor and they agree to put 10 weeks into helping you, I'm talking about meeting you once a week and introducing you to people at their company. I mean, they get very invested. And really, they don't do it simply because they want to help you. They do it because they see something that they want to have their company adopt. And so that kind of internal champion can lead directly to sales and also, to helping to understand how to craft a solution that is easier to sell as well. So I think the whole mentoring approach is very clever and really works well and breaks through these sales cycles.
So Reijo, I'm not even going to ask the question. You've faced barriers of adoption when it comes to insurers. What have they looked like for you? And did the lab help you in any way?
Yeah, I mean, I certainly echo Bob's thoughts there. I mean, you nailed it, Bob. Yeah, absolutely. It is. It's been really interesting in terms of the long sales cycles and of course, in terms of the internal champions, of course, as well. But I mean, the one single barrier has been the kind of shortening the learning curve. So first of all, we had to couple space tech with insurance, and then we had to translate that. And then after translation, we needed to translate the engineering side as well. So we had some pretty big obstacles, but actually through the lab and the community and our ecosystem, we were able to do that. So now, yeah, we've shortened the kind of learning curve a lot, but that was one of the biggest barriers. And we did that through working together with the industry and our mentors who joined us at cohort 4. They're still with us, which is great. And of course, we do that at the lab as well. So we're constantly refining that, but I think it would be a lot harder if we wouldn't have the community. So I think, yeah, so that's the main thing, plus Bob's.
That all makes total sense to me. I hear it time and time again. Right, before we open it up to the audience for their questions, I want to ask you both the same question, which is, can you give us one takeaway that you would like to leave the audience with? So Reijo, as you're on my screen, I'm going to put you in the hot seat first.
Thanks, Rosie. So I think participate in the Lloyd's Lab, help the Lloyd's Lab, help make an impact in this industry, and a global impact at that. So I think you should get involved and help them as much as you can.
Great, thanks. And Bob, to you.
I'm going to go a little different direction than Reijo. I just wanted to say, for my money, liability is far and away the most interesting and exciting corner of the insurance industry. I know cyber is shiny and new, and property insurance has all kinds of cool things like insurance-linked securities, but liability is this huge and mature market which hasn't seen much innovation for decades, and now all of a sudden there's data and models and all kinds of exciting developments in liability. And so I think that as these are increasingly deployed, there's room for significant and sustainable growth, and it's an exciting area.
That is a good takeaway, and certainly a different takeaway to Reijo. We currently have no questions in. Oh, no, one's just come in. How can US brokers support the lab? That is a very good question. And US brokers can come on as mentors if you so wish. So you've heard both Bob and Reijo talk about their mentors. So when we know who is coming into the lab, we compile, I guess, a sort of catalogue of the teams who are going to come in. So in that, we give information about who's on the team, what the current company, what the current products are doing, and what the team are looking to do in the lab. And then mentors operate on a self-select basis. So we would never tell someone to mentor any of our teams. And I think that's where the real value comes in. So as a US broker, we would love to invite you to come and mentor teams in the lab. And if you're ever in the UK, always let us know, and we will definitely arrange for you to come and view the lab and I guess meet any teams who are in the lab. And I guess one final piece is our alumni. We have a huge alumni network, and we can share details of who's in our alumni. It's actually on our website. And if you would like connections with any of our alumni, just let us know, and we will always make those connections.
Yeah, talking about alumni as well. The US is our biggest market. I mentioned briefly because of the in terms of the infrastructure risk that's happening as well. So it would be great to talk to anyone who's listening at the moment about infrastructure risk. If you're looking at large property, but dams as well, and mines and TSFs. So if you're there, let me know.
Thanks, Reijo. So what is the lab exactly is a question which has just been now asked. So the lab is a physical space as well as a sort of a program. So we sit here in Lloyd's in London, and the lab program is a 10-week program which we open to InsurTech. So we invite InsurTechs to come and join us for 10 weeks. And with those 10 weeks, we connect them with the market. So the market being brokers, underwriters, claim specialists, anyone who operates within the Lloyd's ecosystem. And in those 10 weeks, the two sides of the parties, so the lab, InsurTech, and the mentors collaborate to help the lab InsurTech to create something new or validate or test a product. So at the end of these 10 weeks, what we will see is each InsurTech having their own individual journey, building out hopefully something totally new and bespoke to basically target at either underwriters and brokers in the market, in the sense of trying to offer new ways of accessing data, understanding data, or whole new insurance products, as well as operational efficiencies. So it's an accelerator program at its heart. It's 10 weeks, it's really snappy, and at the end of it, we get a whole heap of new products and ideas which can then come to market. How do you educate those new young people coming into the insurance reinsurance business about what you do? That is an excellent question, and not enough, I think, is the bottom line. But what we do is we work with our global network here at the lab. We try and present to any forum where there are young individuals being sort of grouped together and having an educational, I guess, program put together. So Lloyd's can either be running these, or there are big partners who work closely to Lloyd's who also run these. So we talk a lot at these kind of educational programs. We are setting up a newsletter, actually, so we will be sharing the link to that in the chat, so you can see all the latest news about our alumni. We will be showcasing individuals who are in the lab, trying to draw on new sort of technology and trying to kind of give a bit of insight about trends in the market. But it is an ongoing process, and the lab is a small team. There are 6 of us sitting in the lab at the moment, and so we do try and dedicate a lot of our time to supporting the educational piece, but we can always be doing more. So any ideas, please let us know. We're always open to ideas.
By the way, that question, I think that was, if that's the same Tony Joseph, who used to be the West Coast director for Lloyd's. I know when I was a little younger, I had him to educate me about the insurance and reinsurance business. So people like him are fantastic for helping globally educating the new people who are getting involved in insurance.
That's a really
the same point. Anthony Joseph.
Insurtechs, in what stage in a startup life cycle get the most value from the Lloyd's lab? That's a really good question. And I mean, Reijo and Bob, do you want to tell us sort of what stage you were at when you came to the lab? And, I guess if you felt like you were at the right stage?
For us, it was perfect. It was perfect timing, because we had the tech, and we had a hypothesis in terms of, how to implement that in the insurance industry. But so I think always it's a good idea to always have some sort of like prototype or something ready that you can actually demonstrate and use already, if it's really tech reliant. If you're just going for business infrastructure, you want to flesh that out and test it, I'm not sure, less so. But I feel like always it's kind of like, if you have a prototype that's ready or some sort of piece of tech that enables you to do whatever you're doing better, then that's a good time to go.
Yeah. I mean, I do think that there's been some experimentation in the lab about different stages. And that was my memory, that some of the earlier cohorts than us were even earlier stage. And I have the impression that, something a little bit more advanced, something like you say, a prototype. In our case, we were already working with insurers, and a lot of the question had to do with what was most appropriate for the Lloyd's market. And so it was about adapting it to a different market rather than simply developing something that is relevant to insurers more generally. Both, I think, are good, but we already had been around for about 5 years before our first cohort.
And I to add to that, I think it's really hard to really pinpoint the perfect time. You need to understand what you're going to come and work on. So that prototype piece is essential. But in the last cohort, so we're in cohort 9 now, in cohort 8 we had 2 extremes. So at one extreme we had a company called Kita, and they had been formed for a handful of months, and they wanted to come to the lab to build an insurance product around carbon offsetting in the voluntary carbon market. So they were all experts in kind of science and geography, and had no insurance understanding or experience, and they wanted to create this product. And so they have managed to go quite far on their journey, and they're looking to launch their product in January. So they did a lot in those 10 weeks. They didn't achieve obviously creating a new insurance product, but it gave them the start that they needed. To the other side, we had Swiss Re come to the cohort, which is almost laughable because Swiss Re are so huge and so big, but they wanted to come and create an ESG platform. So they wanted to build something out new, and they wanted to collaborate with the market, being the Lloyd's market, to do that. And so they decided that the Lloyd's Lab program was right for them, and as did the market. So they came and joined and went through the cohort in the same way that anyone else would go through the cohort. So it's all very much about what you're looking to achieve on the lab program, and if it's achievable. Size doesn't necessarily matter. So next question, I am working for a brokerage currently. Could I be on the accelerator program while continuing my current role? So if you would like to come and mentor, you 100% could be doing your current role. In fact, we would hugely encourage that. Please do not hand in your notice to come and be a mentor. It's very much a sort of on top of your day job activity. So all of our mentors are either deeply linked with the market, they are our alumni, they can be risk managers, but people who have genuine touch points within the insurance market. If you are looking to come and create and build something new, what we do want to see are teams who are dedicated and are going to be able to afford to put manpower towards the 10-week program. So if someone's working a job part-time and looking to create a new product part-time, we would probably score them negatively for that, because this is a sort of once in a lifetime opportunity for some companies, and we want to make sure that they can fully get the most out of this program possible, and that is by having people dedicated to the program to work through the program. So one for Reijo and Bob, are you promoting your technology to members of any US-based industry trade organizations such as RIMS or WSIA?
So we absolutely are. We've gone, I don't know about promoting it, but we go to their meetings, we present at their conferences, and so we've definitely been involved in promoting it in the US quite a bit.
And we have not yet. So what we have done is we got a place in the UK-US InsurTech corridor, which is a program basically funded by the UK government, and they're promoting us in the US. But I would definitely welcome the opportunity to do so and do more there. I was just thinking, Rosie, as well. I was thinking maybe, and maybe you can take this offline, but people who want to join from the US side as well, and maybe from a light touch perspective, maybe there's a post-program list as well, if people want to take a look at news or new tech that's coming out. If it's an underwriter, risk engineer, or broker, if they have certain interests, and pertinent news goes to them from a tech perspective, and they can get involved and connect. Because I think
that's a great idea, and I think we've just recently launched our newsletter, and so that can perhaps form part of that and build out that sort of information feed, which we have so many great stories. We need to sort of promote them and in the right channels, or equally people can reach out to us directly, and we are always happy to position the right insurtechs with the right individuals. All of our insurtechs are on the Lloyd's Lab website. I believe the link was shared earlier, so do look at the past cohorts as well.
And sign up for the Lloyd's Lab newsletter. It's posted in the chat if you haven't done it already.
Yes, Reijo.
On the last question also, it was interesting. I agree that sometimes insurtechs can spend their time presenting in insurtech forums, which often may not get them in front of brokers and underwriters in the way that is most desirable. It'd be interesting also, Rosie, if the lab were to develop lists of organizations that they would recommend that the alumni bring their presentations to, and take it on the road a little bit.
That is a great idea. That is a great idea.
Yeah. I agree.
We'd be happy to help with that because we do have some experience.
Well, we should definitely reach out separately on that, try and figure out what is the best approach. But we're out of questions and out of time, Enya.
I cannot wish for a better outcome. This is perfect timing and perfect speakers. And thank you all so much for your passion and your experience and insight as well. This is so exciting. I will definitely take on your suggestions, and Bob and Reville and Rosie would look forward to work with you more closely. This is so exciting. Again, thank you everyone for being part of the session today. You can follow up with Rosie, with Bob and Reville via LinkedIn and other social media channels, and also reach out to them if you have any questions. At the same time, this will be our last session for Tuesday's Voice for this year. We're taking a holiday break, and watch out for our emails of that update for next year. We look forward to having you back. At the same time, please stay healthy and stay connected. Thank you again.
Thanks, Rosie.
Thanks
Enya.
everyone.
Good to see you, Bob.
Thank you.
Bye. Bye.